Hello again. Welcome to another episode of the Uranium Market Minute. Today is Friday, December 3rd. This is episode number 44. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Really appreciate you being here. Before we get into it, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own actions. Before we get into the daily scoreboard, I want to remind our subscribers that we published our 30+ page monthly newsletter yesterday morning. It's posted in the members area, and we go deep into the thoughts on the sector and updates on our focus list positions. If you are not a member, when you join, you immediately have access to all of our previous content, all of our monthly newsletters, all of our email bulletins, and the recorded videos of our members only webinars, which we do every month. Spot price of uranium today, $45.20 a pound mid-market, essentially unchanged from yesterday. Not a lot of action going on there. It seems like everybody's kind of standing on the sidelines, waiting for the action to come back into the market, waiting for the selling to stop. The selling does look like it's slowing in terms of volume, which is a good sign. Once again, the Sprott Physical Uranium Trust closed at a discount to their net asset value, minus 3.67% to NAV. They have been essentially at a discount to NAV for over a week now. The last 10 days, they've only taken in $345,000 in new capital. It's almost been consistently at a discount to NAV. As far as yesterday is concerned, they raised no capital, did not purchase any pounds. They still have 32 million in cash in their balance sheet. Since the 17th of August, when their ATM went live, they've acquired 22.8 million pounds of U3O8, and they've raised almost $1 billion just over 3 months. As you know, as I mentioned yesterday multiple times, they have allocated up to $3.5 billion to raise on the ATM. They're authorized to issue up to that amount. And interestingly enough, in an interview last month, CEO John Ciampaglia mentioned that they have been in talks with a number of funds, the funds that they've been speaking with, the interested funds, institutions that are interested in their products, especially the Sprott Physical Uranium Trust, have been on the larger side. These are funds that are not just managing, in the 5 to 10 billion range. These are 100 billion and potentially even over $1 trillion AUM funds. If one of these monstrous funds puts even 1 or 2% of their allocatable capital into a vehicle like SPUT, that could be $1 to $2 billion in a single block trade. These are the types of things that this market is setting up for. These are the types of things that we understand, that we always mention to our members, and it's important to understand going forward. Also helps to inform what to do during moments like this when we have these pullbacks to the 50-day beyond. Some of these stocks are getting close to the 200-day, including URA. If you know what is on the table for what's to come for the uranium market, then these are huge opportunities. If you're all in, you just hold. That's basically it. But yeah, that's interesting to hear from Mr. Ciampaglia that they're talking to funds of that size interested in the SPUT vehicle. So important to know these sorts of things. Looking at the sector equity ETFs, URA reported a decrease of 500,000 shares, URM 100,000 shares in redemptions. We're not surprised to see this. As I mentioned yesterday, we're likely to see even more redemptions reported on Monday, judging by the action today, Monday and Tuesday, because there's a multi-day lag. These two outflows for the ETFs resulted in 20.5 million in mandated selling, a little bit chunky there. The AUMs have dropped about 200 million. They didn't really move much yesterday because the price of the actual vehicle recovered in the markets, balanced out by those outflows. So the AUMs essentially stayed unchanged day over day since yesterday. They now have a combined AUM between URA and URNM of 2.1 billion, a drop of about 400 million from their November high. So that's pretty chunky, right? The stocks have moved down. We've seen a bit of redemptions. Most of that AUM loss is in the performance of the actual vehicle, not necessarily the redemptions, although we're seeing those tick up a little bit here. Let's go ahead and take a look at the charts. Starting off as always with URA, pretty big down candle today. We're looking at down about 5% on the day with another hour of trading to go. However, the volumes are not huge. What does this mean without having huge volumes in the selling? We had a decent selling a few days ago in terms of volume, but that volume is tapering off. This basically means that the buyers are there, but the sellers are more motivated here. And this is not a flight out of the sector. This is, in my opinion, what is, the sector being influenced by the broad market and we're having sort of this correction that has happened is now to the point where the bulls are ready to go, but they're waiting for this to find its bottom before they pile in. That's what it seems to me. I don't think that this is going to turn until we have found that point, until the selling totally tapers off. This looks like it's likely to have a trip to the 200-day here, to be maybe another 5% down. I do think that is a strong possibility for the next few days of trading. And I think that, again, that we'll find a bottom here somewhere in that range, and we'll see the money come back into the sector. And of course, we'll be looking at money coming in to the Sprott Physical Uranium Trust as a signal of that, as we saw that signal at the beginning of every uptrend since the ATM launch, right? We see big volumes come in, big moves in the Sprott Physical Uranium Trust, big moves in the spot market. And of course, same translates to the equities. And in my opinion, what is happening when this happens is that the same money that's piling into the Sprott Physical Uranium Trust is also piling into the ETFs. These are institutional levels of volume here. This is not retail levels of volume. And the same thing tends to happen during the same times in the ETFs, right? Boom, big increasing volume here, increasing volume here, increasing volume here. And so, these large ETFs and the Sprott Physical Uranium Trust are pretty much the only vehicles in the space that can handle, that have enough liquidity that can handle large investments from larger money managers, like I mentioned, have been speaking with Chimpaglia from SPUT. Thing like Cameco, similar. It's just moving just like the ETFs, and most of the stocks in the space are moving similarly, primarily, in my opinion, having to do with ETF outflows outpacing the appetite for the retail bulls. These cycles just continue to happen, and there's always going to be cycles in these resource bull markets. You'll have corrections like this over and over. So I'm going to read another really quick passage from that same book from yesterday. This is The Most Important Thing from Howard Marks. I really like this book. Howard Marks is the co-founder of Oak Tree Capital. He's a really brilliant guy. They manage close to 100 billion at this point. He's a great educator, great thinker in the investing world. And I find myself coming back to this book often, especially coming back to the Contrarian chapter. And this one really struck out to me today. Large amounts of money aren't made by buying what everybody likes. They're made by buying what everybody underestimates. And I felt that was particularly pertinent to the uranium market currently, because I think that what happens is when you have retail come into a space very excited about the developments, they see it working in the short term. And anytime you see a correction, they think, oh, the thesis is broken, because I thought that as soon as Sprott was here, it was going to be nothing but a nonstop frenzy of capital coming into the space, buying of that trust and of ETFs, and therefore the underlying holdings. The flywheel that you mentioned, Justin, all the time. What's going on? Obviously, that flywheel works in reverse when the money flows out of the space. But essentially, what happens is especially the retail, the late money retail, and kind of the tourists, they underestimate the potential. They underestimate. They don't buy what everyone is underestimating, right? And so when you have the bulk of retail start to question the thesis because of what they're seeing on the screen, rather than based on the fundamental developments and what they should be expecting to be happening in the future, then this is what you see, is you see these corrections. You see these corrections on decreasing volume. And so essentially what we are doing and what we've always recommended is keeping your eye on the fundamental story for the mid to long term, and letting that inform you of what's happening in the short term. And so this selling that is not based on anything fundamental in the uranium space is an opportunity. And that's the opportunity that we take advantage of and that we end up recommending. So I'm going to jump into the mailbag question here, because it's along the same vein of this in terms of a fundamental development for the uranium space that I think is one of multiple that people are underestimating. Obviously, what I just mentioned with Chimpaglia and Sprott saying that there's multi-hundred billion, if not trillion-dollar assets under management funds speaking with him about the SPUT vehicle. Okay, you really have to let that sink in and understand what are the outcomes of that type of block trade in the multi-billion dollars potentially. Those outcomes have huge implications for the uranium market. And so does this other development based on this question that came to me. This question came from Alan R. Justin, You mentioned that the EU is close to including nuclear in the EU taxonomy. Can you tell me what this means for the sector? So the EU taxonomy for sustainable finance is essentially a classification system that will officially label certain sectors as sustainable or green, and therefore able to have access to low-cost green financing. This is important. The EU taxonomy rules, they define which clean energy projects qualify for an estimated 350 billion euros per year of this low-cost green financing. So the inclusion of nuclear, it can open up an enormous and cheap source of capital for reactor builds. The classification of nuclear being green will also provide the tacit approval for the European fund managers to allocate capital to this sector. That's an important point to understand. So if the EU taxonomy gives the approval for nuclear to be part of this sustainable finance situation, it also essentially allows ESG-focused funds to invest in nuclear. This is a really big deal. To give you a glimpse of what this might mean, should take a look at the impressive investor reception being given to Canada's Bruce Power. Bruce Power is a nuclear utility in Ontario. Investors are lining up to fund more than $2.5 billion into Canada's first 500 million nuclear green bond issuance. So Bruce Power issued 500 million in green bonds. These are essentially debt bonds that will allow them to finance and refinance projects in the nuclear space, and they are qualified as green bonds for nuclear. They issued 500 million. What did they see? 2.5 billion of demand came to them asking for allocation for these green bonds. Of course, they didn't take all that 2.5 billion, but it's just to see that they were immediately overwhelmed with capital interest in this green bond issuance. We believe this is a harbinger of things to come and could well be a turning point for the ESG investing into the nuclear sector. It's our belief the inclusion of nuclear in the EU taxonomy could trigger significant inflows from ESG investing funds into the nuclear space. What can you invest in the nuclear space? Well, obviously you can invest in utilities, some private and public, but you can also invest in the uranium space, into the physical commodity. That, in my opinion, is it's another brick on the wall for the bullish thesis here. And these are things that now the EU taxonomy ruling should happen any day now. It is not a lock, it's not a guarantee, but it's looking highly, highly likely that it will happen. So we're watching this closely. If it doesn't happen, that's not a killer for the thesis. I don't really believe it's really baked in. It's one of these things, like I mentioned, like Howard Marks says, it's being underestimated. That inclusion into the green EU taxonomy is something that is underestimated by investors, in my opinion. And the amount of capital that is interested in this space, a la what I mentioned about Chimpagli and these huge funds, is also being underestimated by investors in the space. So you think about these really potentially big catalysts for the space, and you have to understand that these things don't always happen in real time. And if you look at the action on the screen, and then you look at these developments and you say, well, this clearly isn't working, right? Like all this money is talking to Chimpaglia. Why aren't they buying now? Why isn't it moving now? These things don't happen right when you want them to happen. And so when you understand what is about to happen, let's say in the next 12 to 24 months, I would say we should see some of these. I mean, we'll see this green EU taxonomy situation finalize within the next week or two. The money that will come into the space via that finalization is probably not going to happen until next year, which is 3.5 weeks away, not that big of a deal. In terms of SPUT, they're looking at a New York Stock Exchange listing. That should be a Q2 or Q3 story. And they have a huge clientele lined up in addition to taking over the URNM ETF that will become the Sprott Uranium Miners ETF. That will happen in Q1. They will have these two vehicles. By the way, as I've mentioned multiple times before, this dual flywheel effect, the SPUT vehicle is a major holding in URNM. So now the CEO of Sprott is telling us that they are speaking to these big funds. They have the SPUT vehicle that actually physically equals purchasing of physical uranium. They have URNM, which has a big holding in the SPUT vehicle, as well as 2/3 of the companies in the space. And they're talking to these huge funds. So these are just a couple of things I want everyone to keep in mind in terms of the long-term thesis. And whether or not we see a price spike based on these moves, I really don't know at this point based on the liquidity that's coming into the spot market. But the bullish situation for uranium has never, ever been stronger. And these moves in the space, if you're all in, you just got to ignore them and trust the thesis that it's going to play out in the long term. If you're not all in and you're wanting to allocate, man, days like today and weeks like the past couple of weeks are just absolute gifts. And in hindsight, on the next leg up, when you notice yourself think, I should have bought more, remember that when it corrects again. So you just have to play against your own psychology. And again, large amounts of money aren't made by buying what everybody likes. They're made by buying what everyone underestimates. On that note, have a wonderful weekend. If you're interested in getting a sample newsletter from us, click the link in the description. You can download a previous month's newsletter, get an idea about the content we put out. We eat, live, breathe this stuff, and this is what we're all about. So you'll get an idea about our performance and the content we put out if you're interested in our newsletter. Either way, have a great weekend. We will see you all next week. Cheers.